For TraderInsight.com, I'm Adrian Mans. Today we had an exciting day in the first hour trading pit. I am back in my hometown, spending a couple days between gigs and just really enjoying some old friends and some very familiar scenery, even after having been gone from here for so long. So as I said, we are squarely in America's heartland. We are right here outside of Cleveland, Ohio, about 30 miles or so. This has been a great couple of days, and the trading week has kicked off to a great start. So let me tell you about the first hour trading pit this morning. First thing that we had going on was a really nice trade in Apple that I'm going to go over. But first, let's go and dig into a chart of my very favorite Baltimore chop of the day, the only one that I focused on, and I'll tell you why in a second. All right, so the very first Baltimore chop 2SD opening gap trade that we had this morning was in an American depository receipt. Those are a little bit different to trade, and if you start fooling with stops once you're in those, I can pretty much guarantee you what's going to happen. You're going to get shaken out. So once you get used to trading ADRs, they're not really that different from stocks. They're correlated to what's going on other exchanges. That makes them a little bit different than your typical trade setup. But in this case, we had Galapagos. This was an ADR, made a big opening gap on the morning to the upside. So those shorts tend to push through quicker than the long. So that gave me additional confidence in the setup. And what I want to do right now is go through this trade and show you exactly what happened once the market opened. So here we see it. This is just the chart of Galapagos. And what you've got here is an opening bar that made a pretty wide travel range. And of course, we had set in the room our entry threshold right there at $170.14. So what's 170.14 do for us? That's the go line. That's where we're going to short the stock. So we had initial questions about, well, where are you going to put the stop loss on this one? It's going to be pretty wide. Well, yeah, it was $171.35, a little bit wider than what we're used to on these opening gaps. Doesn't bother me. I personally think the worst thing that you can do is start fooling with these stops right out of the gate. Puts a very high probability of you're going to get stopped out, and then it also puts you in a position of having to try to jockey back into this GLPG position, and then you stand the risk of having exactly what happened this morning happen, which was the spread started widening and it got progressively harder and harder to get that opening tick. So what I'm going to do is show you exactly how we opened that trade. I'm going to do a show executions. This software is Realtick. Of course, it'll allow you to go back and plot your executions on the chart in real time. Doesn't help much on a stock like Apple because they're all over the place, but on something like this, you're going to see in a second, very, very nice representation of what we did as this trade progressed. We used a fib study to establish our targets. So Eric asked this morning, how did I nail that target exactly the way that I did? Well, it really goes back to that 2SD opening gap course. I do everything exactly the way that I discussed in that course, from setting the targets, setting the stops, taking the entries. This was a very, very solid trapdoor entry. We had a fib expansion, the 38.2 fib expansion, 169.05. We were looking down more at the 168.72 area. That was the 150% expansion. Once we got down into that range and had the first 5 bars actually in place, that's the first time that I was able to move the stop. And in this case, I just ratcheted down to about $170.90. So, you still had a pretty big stop on that trade. It wasn't going to be a fun thing if it stopped you out. But it's not about whether or not it's comfortable. It's not about whether or not it's fun. It's about doing what you plan to do and going back and tightening stops up artificially and just putting a pain threshold on something. That's never a good idea. And it's almost always going to wind up pulling you out of the trade and then putting you in a position of having to chase to get back in. So bad habit to get into. But all in all, when you look at a trade like this, let's show the executions. How difficult is it to get into the trade exactly where you wanted to, and then have those trades line up right with your exits and your targets. So here we go. So if you look, you can see we got in exactly at the entry price. That's even though that spread was as wide as it was. You can see the execution there right at $170.14. And then I think in the room we called about a 172 or a 168.79 exit. You can see there that it took us out right at 168, about 75. So beautiful trade. on GLPG. This one worked out exactly the way that we thought it would. So now let's switch gears and look at those volatility band trades and how we handled those in the room this morning. Here we are, we're looking at Apple. So this is our opening trade in the morning. Today was one of those instances where we had the opportunity to get right in on a pivot break, and boy, was that a nice trade. So we managed to pull off a trade on the bounce from 203.99 right there at our inflection. So we anticipated that we were going to have a bounce down in here, worked out perfectly, came up, got all the way up into the 205.06 line and allowed us to extend all the way up to 205.30. So the very first trade on the session where we wound up with about $1 on this one. You know, the 204.25 line was actually the place that we took the entry after the bounce. That gave us a little bit of wiggle right there on the blue pivot. If you took 203.99 on the bounce, you did better than I did. Congratulations. If you got the 204.25 bounce, then you played it exactly by the book, right? You were looking for it to come back down in, test that line, inflect on that line, and then push higher. And once it was moving, all we did was pulled our order up behind it and managed to trail all the way up into 205.30. So $1 on the first round trip in Apple. Then we had this move down below here, and it sure looked like we were going to get a retracement back down into this area. That didn't happen. This entry wound up being a no-go, and as you recall, we had an exit for a tight stop on this of about, I believe it was 8 cents per share. That was on the violation down here because Julie, as you recall, was watching that 204.82 line from last night's trading plan. When it bounced there, came back up to the line, that was the tell. That was showing us that we, in fact, had a very, very high probability we were going to start moving up into the range again. That's what happened. So the next place that we looked was when it came down and inflected right there after the initial push higher. It got us in, tracked up to 205.30. Last trade on the session for us on Apple, managed to pick up another quarter point or so per share. Really nice day in the first hour trading pit, and you know, I think all in all, simple trading, not a whole lot going on. Great way to spend the first hour of the day. So before we go, let me just show you that Nasdaq Scalper trading plan and the Apple Volatility Band hierarchy. So this is on the plan every single night. If you subscribe to it, congratulations, you made a good decision. If you're not subscribing to it, congratulations, you saved yourself $15 and missed out on making about $1,000. These are very, very highly defined ranges that we expect Apple to trade in. You can see here that they are identified ahead of time. Also down below, you can see where each one of the bands that we expect to see develop over the course of the session are, and you can see exactly where we expect those bounces to be. You can also go through and check for confluence with the support and resistance levels, the central pivot, everything that's going to get into your way over the course of the trading session, and everything that's going to work to your advantage over the course of the day. So if you haven't subscribed yet, or you would just like to take a trial and see what it's all about, give Victor a call, and he will be happy to walk you through it, I guarantee you. And you know, if you have questions about it, feel free to send me an email, and I can look at those as well. So that's it for today's first hour trading pit action. If you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.